In this video, we'll be discussing the top 5 stocks that were most commonly bought by our 77 super investors in the first quarter of 2023, as tracked by Dataroma. But before we begin, I want to make it clear that these stocks should not be seen as direct recommendations or a shopping list for us as value investors. It's important to remember that this list simply provides us with ideas to explore further in our own time. Hello and welcome to Only Stocks, the channel that is dedicated to providing you with the latest news, insights, and analysis from the ever-evolving world of the stock market. We understand that the stock market can be quite complex and intimidating, which is why our team of experienced analysts and industry experts are here for you. Don't forget to hit the subscribe button and turn on notifications to stay up to date with our latest content. Let's take a look at the list of stocks that caught the attention of our super investors in the first quarter of 2023. Coming in at the 5th spot is Intuit. During the quarter, we had 7 super investors buying shares of Intuit. So, what does Intuit do? Well, they provide financial management software to small and medium-sized businesses. You might be familiar with some of the brands they own, like TurboTax, Credit Karma, QuickBooks, and MailChimp. Intuit's revenue is divided into 4 segments, but the main drivers of their business are small business and self-employed, QuickBooks and MailChimp, and consumer TurboTax. These segments generate about 80% of their revenue and the majority of their operating income. The business is expected to face more challenges than benefits in the coming years due to macroeconomic factors. Rising interest rates will have a negative impact, especially on their Credit Karma business. Additionally, if unemployment rates increase, it will further hurt their TurboTax business. Even the IRS is reporting a decline in the number of filed tax returns compared to the previous year, after a surge in filings during the pandemic due to stimulus check calculations. So, there are definitely some hurdles that the business needs to overcome. Now let's move on to the 4th most bought stock by our super investors in Q1, which is Meta. Meta has faced a lot of challenges in recent years, mainly due to their significant investment in metaverse development and the declining profitability of their advertising business. Factors such as Apple's limitations on ad targeting, the impact of the macroeconomic environment on marketing budgets, and the difficulty in monetizing short-form video content have all contributed to the headwinds faced by Meta. These challenges have caused the stock to decline by about 70% from its high in 2021 to its low in 2022. However, in 2023, the stock has experienced an impressive recovery, gaining around 180% since its low in November 2022. This indicates that our super investors timed their investments well, and there have been some positive developments coming out of the company recently that investors can be optimistic about. In their latest quarterly earnings report, the company achieved its first year-over-year increase in sales after 4 consecutive quarters of decline. The revenue rose by 3% compared to the previous year. However, it's important to note that costs also increased significantly, resulting in a 15% decrease in operating income. As a result, the operating margin dropped from 31% to 25% compared to the previous year. Despite these challenges, the company remains optimistic and has issued positive guidance for the next quarter, with expected revenue between $29.5 billion and $32 billion. Even if we consider the lower end of the guidance, it would still represent a 2% growth in revenue compared to the same period last year. This shift from pessimism to optimism has given investors a glimmer of hope, as they may witness 2 consecutive quarters of year-over-year revenue growth. According to Peter Lynch, it's not always necessary to invest in a stock when it transitions from being good to great. Sometimes, finding stocks that go from being bad to just okay can be profitable too. In the case of Meta, it has faced challenges in recent years, but it's a stock that often attracts the attention of super investors. This suggests that institutional investors are confident in the long-term prospects of the company. And now let's talk about Microsoft, which comes in at number 3 on our list. Microsoft was purchased by 9 of our super investors in the first quarter. Microsoft has been capitalizing on the AI trend in recent months and has seen its stock rise by about 40% since the release of ChatGPT in November 2022. Although Microsoft doesn't own OpenAI, the company behind Chat, it is a significant shareholder. Microsoft signed a $1 billion deal with OpenAI in 2019, becoming their exclusive technology partner. Earlier this year, Microsoft extended the partnership with a further $10 billion investment, leading to speculation that Microsoft effectively controls OpenAI. While the success of ChatGPT hasn't had a significant impact on Microsoft's financial results yet, the market is already factoring in the potential of AI into Microsoft's stock price. Interestingly, these developments have also caught the attention of Bill Gates, who has increased his holdings of Microsoft stock in his foundation's portfolio. It is now his largest position. While this anecdote is intriguing, as value investors, we shouldn't put too much weight on it. What really matters is Microsoft's core business. Microsoft has built a strong foundation with its various software offerings such as Windows, Office 365, Azure, Xbox Game Pass, LinkedIn, OneDrive, and Microsoft Teams. These software products create strong customer loyalty and generate consistent revenue for Microsoft. While AI may be the trendy new technology, it's likely the strength of Microsoft's core business that attracted the attention of our super investors. Now let's talk about the second most bought stock, which is Amazon. 13 of our super investors bought shares of Amazon. If you take a look at their stock chart, you'll understand why. Over the past 6 months, the stock has dropped back to 2020 levels due to challenges in the macroeconomic environment. Amazon has been focused on expanding its capacity to increase revenue and profitability. However, with the current inflation, their costs are rising just as quickly. This has led to lower earnings for Amazon. Despite the short-term pain, value investors believe that Amazon's ongoing investments will pay off in the long run. Amazon is known for its exceptional capital allocation, continuously reinvesting money into growing the company. Unlike other companies that accumulate cash, Amazon and Tencent are actively putting their money into new growth opportunities. This indicates that they truly believe in the potential of these investments. So, that's the story with Amazon. And finally, we come to the most bought stock in Q1 of 2023, which is Google. Google consistently ranks in the top spots on this list each quarter, and it's not surprising why. Despite a slowdown in advertising spending, Google has been able to maintain steady revenue. Their cloud business is also gaining momentum, and they have a strong financial position with a solid balance sheet. The super investors see Google as a cash-generating machine that, even in a recession, doesn't decline significantly. Google's dominant position in internet search gives them a strong competitive advantage. Unlike Meta, device manufacturers rely on Google, not the other way around. Google is the go-to search engine for most people, and there's no close competitor. This creates a powerful moat that protects their cash flows. Over the past 4 quarters, Google's free cash flow has consistently improved despite the challenging economic environment. Additionally, Google has a substantial amount of cash and marketable securities, outweighing their liabilities. These factors, along with their profitability and the fact that the stock traded around $90 per share in Q1, likely influenced many super investors to buy the stock. So, those are the top 5 buys from the super investors in Q1 of 2023. Let me know your thoughts and if any of these stocks are part of your portfolio.